Have you ever wondered why millions of people around the world are talking about Bitcoin and cryptocurrency? Some believe it's the future of money, while others think it's just another financial bubble. But what is crypto really, and why has it become one of the biggest financial innovations of the 21st century? In this video, you'll learn everything you need to know about cryptocurrency in simple English. We'll cover what Bitcoin is, how blockchain works, why Ethereum is different, how people buy and store crypto, the biggest risk to avoid, and whether crypto is still worth learning in 2026. By the end of this guide, you'll have a solid understanding of crypto without needing any technical background. Let's start with the basics. Before Bitcoin existed, almost every financial transaction depended on banks or payment companies. Whenever you sent money, someone in the middle verified and processed that payment. In 2009, everything changed when an unknown person or group using the name Satoshi Nakamoto introduced Bitcoin. Bitcoin became the world's first successful decentralized digital currency, meaning no government, bank, or single company controls it. Instead, it operates on a global network of computers that work together to verify every transaction. This system allows people to send money directly to one another securely, transparently, and without relying on traditional financial institutions. One of the biggest questions beginners ask is, if no bank controls Bitcoin, how can anyone trust it? The answer is blockchain technology. Think of the blockchain as a public digital ledger that records every transaction ever made. Instead of being stored on one computer, copies of this ledger exist on thousands of computers around the world. Every new transaction is verified by the network before it is permanently added to the blockchain. Once recorded, it cannot be easily changed or deleted, making the system highly secure and transparent. This is why blockchain is considered one of the most revolutionary technologies of our time. Another reason Bitcoin became so valuable is its limited supply. Unlike traditional currencies, which governments can print whenever they choose, Bitcoin has a fixed maximum supply of only 21 million coins. Because no more than 21 million Bitcoin will ever exist, many investors compare it to digital gold. The idea is simple. When demand increases while supply remains limited, the value may rise over time. However, this does not guarantee profits. Bitcoin is highly volatile, meaning its price can increase dramatically but can also fall just as quickly. That's why smart investors always do their own research, invest responsibly, and never risk money they cannot afford to lose. Now, you might be wondering why thousands of different cryptocurrencies exist if Bitcoin was the first. The answer is that Bitcoin was designed mainly as digital money and a store of value, but developers soon realized blockchain technology could do much more. That's where Ethereum changed the game. Launched in 2015, Ethereum introduced smart contracts, self-executing programs that run automatically when specific conditions are met. These smart contracts made it possible to build decentralized applications, NFT marketplaces, blockchain games, lending platforms, and many other services without relying on a central company. While Bitcoin is often called digital gold, Ethereum is frequently described as the foundation for the decentralized internet because it powers an entire ecosystem of blockchain applications. As crypto continued to grow, thousands of new projects entered the market. Some focused on faster transactions, others aimed to reduce fees, improve privacy, or connect different blockchains together. However, not every cryptocurrency has real value or a genuine purpose. Some projects are backed by strong technology and experienced development teams, while others are created purely to attract attention before disappearing. This is why successful crypto investors spend time researching a project's goals, development activity, community, and long-term vision instead of buying coins simply because they're trending on social media or being promoted by influencers. Before you buy your first cryptocurrency, it's important to understand how people actually own and protect their digital assets. Unlike a traditional bank account, crypto is stored in a digital wallet. A wallet doesn't physically hold your coins, it stores the private keys that give you access to them on the blockchain. Think of these private keys as the master password to your digital wealth. If you lose them, you could permanently lose access to your crypto. If someone else gets them, they can take your funds. That's why experienced investors never share their recovery phrase with anyone and always enable two-factor authentication on their accounts. Another important lesson for every beginner is learning how to avoid crypto scams. The crypto industry has created incredible opportunities, but it has also attracted scammers looking to exploit new investors. Be cautious of anyone promising guaranteed profits, secret investment strategies, or offers that sound too good to be true. Fake giveaway websites, phishing emails, impersonators on social media, and fraudulent investment groups are common tactics used to steal cryptocurrency. The safest approach is to verify information through official sources, take your time before making decisions, and remember one simple rule. If an opportunity promises fast, risk-free money, it's almost certainly a scam. Knowledge is your best investment, and patience is your strongest protection. At this point, you may be asking yourself a simple question. If cryptocurrency has so much potential, why doesn't everyone invest in it? The answer is surprisingly simple. Most people are not afraid of crypto itself. They're afraid of what they don't understand. Every major innovation in history faced skepticism in its early years. People once believed the internet was just a passing trend. Some thought online shopping would never replace physical stores. Others laughed at the idea of streaming movies instead of renting DVDs. Today, those technologies are part of everyday life. Cryptocurrency is following a similar path. While nobody can predict exactly how the future will unfold, blockchain technology is already being explored by banks, payment companies, technology firms, and even governments. The conversation has shifted from will blockchain survive to how will blockchain change the way we use money and digital services. That being said, it's important to separate technology from investment. Just because blockchain has real-world potential doesn't mean every cryptocurrency will succeed. Thousands of crypto projects have been launched over the years, but many disappeared because they lacked innovation, security, or long-term vision. Smart investors don't chase hype. They study fundamentals. They look at the team behind a project, its real-world use cases, token economics, developer activity, community support, and long-term roadmap. Instead of asking, how quickly can this coin make me rich? Experienced investors ask a different question. Does this project solve a real problem that millions of people actually have? That mindset alone can make a huge difference when navigating the fast-moving world of cryptocurrency. Always remember, education comes before investment, and informed decisions are far more valuable than emotional ones. Now let's talk about one of the most important questions every beginner asks. How do you actually buy cryptocurrency? The process is much easier than most people imagine. In the United States, millions of people use regulated cryptocurrency exchanges that allow them to buy digital assets using a bank account, debit card, or bank transfer. After creating an account, verifying their identity, and enabling security features like two-factor authentication, users can purchase a small amount of cryptocurrency in just a few minutes. Many beginners make the mistake of believing they need thousands of dollars to get started, but that's simply not true. Most major cryptocurrencies can be purchased in fractions, meaning you can own a small piece of Bitcoin or Ethereum without buying an entire coin. This makes crypto accessible to almost anyone who wants to learn and participate responsibly. However, buying cryptocurrency is only the beginning of the journey. Building long-term success requires discipline, patience, and emotional control. One of the biggest reasons people lose money is because they allow fear and excitement to drive their decisions. When prices rise rapidly, many beginners rush to buy because they don't want to miss out. Then, when prices suddenly fall, they panic and sell at a loss. This emotional cycle has repeated itself throughout the history of financial markets, including stocks, real estate, and cryptocurrency. Successful investors understand that markets naturally move through periods of growth, correction, and recovery. Instead of reacting to every headline or social media post, they focus on learning, managing risk, diversifying their investments, and thinking long-term. The goal isn't to get rich overnight, it's to make informed decisions that stand the test of time. Remember, this video is for educational purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. As we come to the end of this guide, remember one thing: cryptocurrency isn't a guaranteed path to wealth, and it's not something to fear either. Like any emerging technology, it comes with both opportunities and risks. The people who benefit the most are usually not the ones chasing quick profits. They're the ones who invest time in learning, stay patient during market ups and downs, and make decisions based on facts instead of emotions. Whether crypto becomes a major part of your financial journey or simply something you understand better, education will always be your greatest investment. One topic that every beginner should understand is crypto mining. When people hear the word mining, they often imagine workers digging deep underground for gold or diamonds. But Bitcoin mining is completely different. There are no shovels, no caves, and no hidden treasure. Instead, Bitcoin mining is a digital process where powerful computers compete to solve complex mathematical puzzles. The first computer to solve the puzzle earns the right to verify a new block of transactions, which is then added to the blockchain. As a reward for helping secure the network, the miner receives newly created Bitcoin along with transaction fees paid by users. This process is what keeps the Bitcoin network decentralized, secure, and resistant to fraud. Mining is also the reason why creating fake Bitcoin is nearly impossible. Every block added to the blockchain is linked to the previous one using advanced cryptography. If someone tried to change a transaction from years ago, they would have to rewrite every block after it while simultaneously controlling more computing power than the rest of the global Bitcoin network combined. For a network with thousands of miners spread across different countries, this would require enormous resources and is considered practically impossible. This is one of the reasons Bitcoin has earned the trust of millions of users around the world. Another important concept is market cycles. Cryptocurrency prices never move in a straight line. There are periods when prices rise rapidly, known as bull markets, and periods when prices decline for months or even years, known as bear markets. New investors often make the mistake of believing that prices only go up, but experienced investors know that volatility is a normal part of every financial market. During a bull market, excitement and optimism can push prices higher, while during a bear market, fear and uncertainty can cause sharp declines. Understanding these cycles helps investors stay calm, avoid emotional decisions, and focus on long-term goals rather than reacting to short-term price movements. Another exciting development in the crypto industry is decentralized finance, often called DeFi. Traditional financial services usually depend on banks, brokers, or other financial institutions to manage transactions. DeFi aims to provide similar services through blockchain-based applications that operate using smart contracts. In simple terms, these applications allow users to interact with financial tools without relying on a central authority to process every transaction. This innovation has opened the door to new ways of borrowing, lending, trading, and earning rewards through blockchain technology. While DeFi has created exciting opportunities, it also comes with additional risks, including software vulnerabilities, market volatility, and project failures. For beginners, the smartest approach is to learn how these systems work before deciding whether to use them. As the crypto ecosystem expands, regulations are also becoming more important. Governments around the world are working to balance innovation with consumer protection. In the United States, cryptocurrency businesses are generally expected to follow laws related to identity verification, anti-money laundering requirements, and taxation. Investors should also understand that buying, selling, or exchanging cryptocurrency may have tax consequences depending on their individual situation. Regulations continue to evolve, so staying informed through reliable sources is just as important as understanding the technology itself. The future of crypto will likely be shaped not only by innovation, but also by the rules that help create a safer and more transparent marketplace for everyone. So, where is cryptocurrency headed over the next decade? While nobody can predict the future with complete certainty, one thing is clear: blockchain technology is continuing to evolve at a remarkable pace. Every year, developers introduce faster networks, improved security, and new applications that extend far beyond digital payments Today, blockchain is being explored in industries such as healthcare, supply chain management, digital identity, gaming, entertainment, and even real estate. The idea is simple. If information needs to be stored securely, verified transparently, and shared without relying on a single central authority, blockchain could become part of the solution. Whether every project succeeds is another question, but the technology itself is attracting attention from some of the world's largest companies and financial institutions. For beginners, however, the most valuable investment isn't Bitcoin, Ethereum, or any other cryptocurrency. It's knowledge. The crypto market changes quickly and new trends appear almost every month. Chasing every new coin or following every social media influencer rarely leads to long-term success. Instead, focus on understanding the fundamentals, learning how blockchain works, recognizing risk, and developing patience. Many successful investors spend far more time researching than they do trading. They understand that protecting their capital is just as important as growing it. If you make learning your priority, you'll be in a much stronger position to evaluate opportunities, avoid common mistakes, and make confident decisions as the crypto industry continues to mature. Finally, remember that no investment is completely risk-free. Cryptocurrency has created life-changing opportunities for some people, but it has also taught expensive lessons to those who invested without understanding what they were buying. Markets will continue to rise and fall, headlines will continue to create excitement and fear, and new technologies will continue to emerge. Your greatest advantage is staying informed, thinking critically, and making decisions based on research rather than emotion. The goal is not to predict every market movement. It's to build the knowledge and discipline that can help you navigate the world of cryptocurrency with confidence for years to come. If you found this video helpful, make sure to subscribe and turn on notifications because this channel is dedicated to helping you understand cryptocurrency, blockchain, investing, and personal finance in the simplest way possible. In the upcoming videos, we'll explore topics like how to buy your first Bitcoin safely, how to avoid the most common crypto scams, how crypto wallets work, and how to research promising blockchain projects like a professional. Thanks for watching, and remember, every expert was once a beginner. Keep learning, stay curious, and I'll see you in the next video. Thanks for watching.